Alkem Laboratories, known for its multiple growth drivers, staying ahead of market and performing better than Pharma Nifty on a continuous basis. From March 2017 to March 2022, Alkem leading all the way over Nifty Pharma, better returns, maintaining a big gap and returning over a period of 5 years 61% as compared to 29% of Nifty Pharma, almost double. Alkem Laboratories, with sizable revenue reaching up to 8,865 crores as of 31st March 21, Alkem, one of the leading pharmaceutical companies of the country with over 20 manufacturing facilities and a 5-year CAGR of 11.9% between March 16 and March 21. In terms of size and turnover, it ranks number 5 in the Indian pharma market. Impressive PAT percentage achieved during the period, peaking at 18.2% as of 31st March 2021, along with highest ever EBITDA percentage of 21.9 in 6 years, and that is to the credit of Alkem Laboratories. Compared to December 20 to December 21, the company's revenue share has grown up to 70% from India, a growth of almost 30% year on year. In US, there is a degrowth to the extent of about 7%, while the rest of the world, although the volume is insignificant, the proportion of growth has been of the order of 26% between December 20 and December 21. When it comes to overall picture, country of consequence and impetus is India, forming 70% of turnover and more in respect of its profitability. Strong brands are the strength of Alkem Laboratories, leading in every market, either number 1 or number 2. Its 5 brands, Clabum, Pan, Pan-D, Taxim and A to Z contribute about 20% of Indian turnover, and the top 10 brands contribute about 30%, and each brand is a leader in its own right, and that is adding to the total strength of this company, which is coming out very strong after the COVID setback. Substantial improvement in the EBITDA, more particularly during the last 2 years, and as a result the operating cash flow has grown to a new high, which has resulted in the enterprise value multiple at a very attractive level. And operating cash flow as a percentage of EBITDA is an index of efficiency of a company, and Alkem Laboratories enjoys an OCF percentage of well above 80%, and that is a long-term strength of the company. Alkem's profit after tax has grown substantially during the last 2 years, but Alkem remains a very conservative company when it comes to payment of dividend, which it has kept it around 350 to 400 crores a year, and as a result, current year's payout ratio comes below the normal of 30% plus. Even then, the reasonable yield of 1.2 to 1.4% is interesting enough for a normal investor. On a trailing 12 months basis, starting from December 2021 backwards for 4 years, revenue shows a 3-year CAGR of around 14%. EBITDA has grown, but in the recent 12 months, there has been a fall mainly on account of additional selling and administrative expenses and heavy provisions done on inventory during March 31st, 2021, and even then it has reached a EBITDA percentage of 19.4%, which might improve going forward given the company has no carry forward deficiencies in terms of stock provisions. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. Hope you will find the video interesting and useful. During March, the share movement was taking support from 3,200 and moving up, and taking the 52-week high of 4,070 and low of 2,670, 3,204 works to 38.2% Fibonacci level, and incidentally the current Fibonacci level at 3,493 is 59.1 and there is a support immediately available at 50% Fibonacci level of 3369, failing which 38.2 of rupees 3204 can be a long-term support. The share price crossed 200 EMA in the middle of March, but recent two big candles moving southwards are bringing the price closer to 200 EMA and also the Bollinger Band midpoint. In the event of the price moving below 200 EMA, there might be a bearish pressure bringing it further down. Price action data has remained quite positive for the stock, as trading quantity, which had an average of 90,162, has remained above that level, moving up. At the same time, the closing price with periodic average of 3,475 has remained above that level. Both price and quantity moving upwards is a positive sign. And coming to order size, it has remained below the normal average of 8.3, showing lesser of speculative interest, while the delivery percentage reconfirms investment interest with delivery percentage going above the 51%. Three positives: price moving up, quantity moving up, and also delivery percentage. Alkem Laboratories, from the perspective of price earning multiple, is an attractive security based on its recent price of 3,494. It has got a PE multiple of 22.9, which is closer to its midpoint over a period of 7 years. But its attractive point is 22.9 is almost 30% below the sectoral index of 33.4, and that makes Alkem a quite interesting investment idea given its potential for revenue and profitability improvement. Two strong positives for Alkem Laboratories: medicines returning to pre-COVID levels in terms of demand, and branded domestic formulation segment remaining strongly protected. But the concerns are rising API prices due to supply disruptions from China, and also price erosion continuing in the US segment, along with delay in its key launches. On the whole, Alkem Laboratories is on a strong wicket when it comes to Indian market. As for the overseas market, it has to wait for its time. Hope you liked the presentation on Alkem Laboratories, a strong brand-based domestic growth story affected by US price erosion. You can access similar presentation at InfoCard on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your attention, interest and valuable time. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, seek the advice of a competent professional before taking action of any kind.